I'm Sam Bazzini, CEO and co-founder of Warpaint. Before I get fully into the presentation, I'd just like to play you a short video so you can see what we do at Warpaint. Next slide. Next slide. Okay, so at Warpaint, we produce affordable, high quality, on-trend colour cosmetics under several of our own brands, our lead brands being W7 and Technic. The group employs 125 staff worldwide. We've got 177,000 square foot of warehouse and office space in the UK. Our headquarters is in either Buckinghamshire, a stone throw away from Heathrow Airport, to give you an idea where we are geographically. We've also got a significant operation in Silsden, West Yorkshire. And we also have offices in the USA, Hong Kong and China. And the offices in the US are used primarily for selling goods into the largest cosmetic market in the world. And for Hong Kong and China, the offices are used for quality control and sourcing our products. We're asset light. We outsource all our manufacturing and we use multiple factories. We find this gives us the best price, the best quality and the best service. And if we don't like the price, the quality or the service that we're getting, we can move very quickly, and we have done, and we will do, I'm sure, in the future. We're strong financially, we're profitable, we're cash generative, we've got a strong balance sheet, we're completely debt-free, and we are dividend paying. Next slide. So we've had a record first half performance in 2023 with revenues of 36.7 million against 25.2 million in the first half of last year. This is an increase of 46%. We've also managed to grow the margin ever so slightly from 39% to 39.1%. Although it's only a slight increase, we're absolutely delighted that we've managed to increase at all. You know, with the current inflationary pressures that all businesses are having in the UK, you know, we're delighted to have ticked that number up ever so slightly. Profit from operations, 6.3 million against 3.5 million in the first half. This is an increase of 80%. And at the end of June, we had 7.1 million in cash in the bank against 4.3 million the same time last year. I think at this point, it's worth mentioning our interim dividend, which is due in November. It's been increased from 2.6p last year to 3p this year. Next slide. Strategic developments and current trading. Strong trading has continued into the second half of this year. Revenues up to the 31st of August were 54.5 million against 37.5 million for the same period last year, which is an increase of 45%. Our expansion strategy also continues with further planned launches in the second half of this year and the beginning of next year into new major retailers, as well as further expansion into the retailers we're in. For example, more stores, more products, and more space. A good example of that is Boots. We're currently in 80 Boots stores. We're doing very, very well in there. There are 1,800 Boots stores, so we expect further expansion in the next 6 to 12 months. After a successful trial in 20 New Look stores at the back end of last year, we've now rolled out into a further 200 stores with our W7 brand, as well as they've also bought into some accessories, false eyelashes, false nails that are scattered around the store. And we've just launched our W7 brand into 73 Superdrug stores this month. Superdrug has been a major target for us. Very, very hard to get in there. So we're delighted to finally have opened that door. E-commerce, online sales also have accelerated. We're 200% up to the end of August with revenues of 2.7 million against 900,000 for the same period last year. Outlook, we're confident that the group will continue to perform well for the remainder of the year and beyond. The house brokers note forecasts revenues of 82 million with a PBT of 14.4 million, and we are uber confident we can deliver on that number. Next slide. Okay, so this slide really sums up what our lead brand W7 is all about. W7 is very, very often referred to on social media as the king of dupes. We're not trendsetters, we're followers of fashion. And our new product development department will follow the prestige brands very, very closely. And if something interesting or innovative comes onto the market, we will try and get the W7 version out within 3 to 6 months. The W7 version will be similar in look and, just as important, quality. It's no point making an inferior product. So we're very hot on our quality. And these dupes, these inspired products, they only represent 30% of what we do. The rest is core, a red lipstick, a red nail polish, a black mascara. But this 30% is what creates the buzz and interest around the brand. And if you look down this slide, on the right-hand side, you will see a Huda eye palette. This is the prestige version made famous by a famous influencer called Huda, and at £56. And above that, you'll see the W7 version, which is inspired by Huda at £9.50. And when we go and see buyers in large retailers, we use this slide along with samples of the W7 product and the prestige product to explain to buyers the whole concept of the brand. And they immediately get it and they understand it. They like the quality and they like the whole value proposition. And once it's on shelf, the consumer also immediately understands the proposition. They understand the look they're going to get. They understand the value they're getting because they've been reading about it for the last 3 to 6 months on social media. Next slide. So I put this slide in, it's some market data we purchased from Mintel, and it really gives some good comparisons between the UK and the US market, and why it highlights the potential that we have in the US. So if you look at the first bubble, forecasting colour cosmetics for the UK market is 1.7 billion. If you look down for the US, it's 17 billion. It's not a typo. It is 10 times the UK number. In the UK last year, we did 27 million in sales. We're not really in a mature market in the UK, but assuming we were, the potential in the US is 10 times that. It's 270 million. So there's an enormous opportunity for growth in the US. And the similarities in the two markets. In the UK, 2/3 of women use colour cosmetics daily or a few times a week. The same applies in the US. In the UK, 79% think the price of a product is an important criteria. In the US, it's slightly lower, 72%, but a very similar number. We're an affordable brand. We're in a cost of living crisis. So we're well placed to grow in this current climate. And finally, 67% think value and mass market brands perform as well as prestige brands. In the US, it's even higher, it's 80%. As I mentioned earlier, we are a dupe brand. We mimic a lot of what the more prestige brands do. We make a good quality. So looking at all this data, I feel Warpaint meet all the criteria to succeed, both in the UK and the US market. Next slide. Strategic plan to deliver growth. We focus on 5 key brands. In the past, we had too many brands, too many products. This led to huge costs in new product development, trademark registration, compliance, formulations. After 18 months, we'd discontinue these brands, and all the money we poured into them would disappear with them. So we now focus on our 5 key brands. W7, I've already explained, a younger demographic, 16 to sort of 32 on trend. We then have a brand called Technic, which is another colour cosmetic brand, again, affordable, but everyday essentials, not so focused on the fashion and the packaging, more on being functional, but nevertheless a good product. Body Collection is for a much older demographic, more premium packaging, more focused on the formulations. Man Stuff, we have a brand called Man Stuff, which is a men's toiletry brand, which is deodorants, shower gels, shaving foams, that type of thing. And finally, we have a brand called Chit Chat, where we like to say where the fun begins. This is a pre-teen colour cosmetic brand. So all these brands do something different. They don't cannibalize each other. If you were to see them all in one shop, you wouldn't even associate them with the same company. So it's very, very good that you don't produce brands that take business away from each other. And because we have been focusing on just these brands, we're building brand equity in each and every one of them. The margin has improved across the business as well as the profitability. Develop and nurture current business. This is all about growing and protecting our current customer base. There is no point in acquiring new customers such as Tesco, Boots, CVS and Superdrug if we don't protect what we have. So we're very focused on our existing customer base. And I'm pleased to say in the first half of this year, we've had 46% growth, as I mentioned, and the lion's share of this growth is with existing customers. Grow market share in the UK. This is what I like to call our 75% strategy. Our business grew up in the discount sector with the likes of B&M, TK Maxx, Savers, but this only represents 25% of the colour cosmetic market in the UK. So it leaves another 75% to go at. The Tesco's, the Boots, the Asda's, the Superdrug. The first retailer we landed, the first large retailer we landed was Tesco in February 2020, just before all the lockdown started. We started off in 50 stores. We're now in 1,400 stores. And all the success and learnings we got from Tesco, and we get their club card data, is helping us to open doors with other large retailers. Most notably, recently, we've opened, as I mentioned, in 73 Superdrug. Superdrug have 900 doors or 800 to 900 doors. I'm confident we can grow further in the Superdrug estate. We've got built-in growth for the next few years with some of the UK retailers that we've just sort of entered in over the last 18 months. Grow market share in the US and China. Very much like the UK. In the US, we had far too many products. The overheads were too high. So we now focus on 100 to 150 of our hero lines in the US. When you're using third-party logistics, which we do in the US for our distribution, you can't have stock sitting around gathering dust. It needs to be fast moving. And because we've taken these steps, this has helped to reduce cost, improve margin, and the profitability of the US business. Like the UK, we target the large retailers there. In the past year, we've opened up with CVS, HEB. For those who don't know HEB, they're a grocer based in Texas, very large grocer based in Texas with over 450 stores. We're in 200 odd of them. We've opened up Sally's, Kroger's, and we're in talks with advanced talks with a couple of large US retailers with a view to opening up in the next year to 18 months. It's a slow process putting cosmetics into these large retailers. Grow market share in China. In China, we sell directly to the consumer, and we use online platforms like Tmall, Taobao, and Red. They're equivalents to Amazon. We've got a proper business in China with people that we employ on the ground. It's not easy to do. We register all our products in China. We ship from the factories directly to a fulfillment house. We use a customer service center to deal with any queries and issues we have in China. We use KOLs, key opinion leaders, and influencers to help us grow the brand in China and promote the W7 brand. And sales are growing steadily. I'm happy to say last month, it's not material, so I can tell you the number. We did £50,000 of online sales last month in China. It's not a huge number compared to the rest of the business, but the online business there is in its infancy, and I believe this is a wonderful opportunity. Continue to grow online sales. In 2019, we decided we would focus on our e-commerce sales. Up until that time, we'd used our own website as a marketing tool. So the first thing we did is we stopped supplying retailers that were trashing the brand online. We wanted everything, sold at a sensible price. And the result of that is in 2019, we turned over £180,000 for the whole year on our e-commerce. And this year, for the first half, we've turned over £2 million. So the strategy is obviously working. In the UK, we sell on our own website and we sell on Amazon. And in the US and Europe, we sell solely on Amazon. We've got no infrastructure in Europe or the US for fulfillment. So Amazon offers something called Small and Light, which is you put your goods into Amazon, fulfilled by Amazon, and they ship the goods out for you to the customers. Small and Light is very, very cheap to operate. If it's under sort of €10 or $12, the commissions are much lower and the shipping's much lower. So people ask us, is it profitable? Can we make a profit out of Amazon? We do. We make the same sort of, I'll call it a PBT margin, which is 16 to 18%, which is the same as the rest of the business. The gross margin obviously is much higher, but the PBT all nets down to the same margin in line with the rest of the business. Could we grow it faster? Yes, we could. It's very, very easy to burn cash online. We don't want turnover for the sake of turnover. So we're very, very focused that our online business is profitable, as is the rest of the business. Finally, on this slide, improve environment and sustainability, ESG, environmental social governance. Very important to our customers, consumers, and our investors. So it's obviously something we take a lot of notice of. We're doing a number of things, the obvious things, reducing air travel, virtual exhibitions. We intend to be vegan and paraben-free in the next 12 months. The reality is we're more or less vegan and paraben-free now. We've just got a bit of residual stock that we're working through. reducing plastics and plastic packaging wherever possible. These are just some of the things we are doing. It's a moving target, and we're doing different things all the time. And full details can be found on our corporate website, Warpaint London PLC. Next slide. Finally, the summary. Why invest in Warpaint? We've had a record first half with strong sales and growth. Revenues up by 46%. We've got a focused strategy to deliver further growth. We've got planned launches in large retailers in 2023 and 2024. And we've just launched our brand in 73 super drug stores. I think it's enormous potential there. A profitable e-commerce business, 212% up in the first 6 months, with further plans to grow online sales. Momentum continuing into the second half, 45% up at the end of August. And for me, the most compelling reason to invest in Warpaint, we're part of a small group of Warpaint, of AIM-listed companies that are profitable. We've got a strong balance sheet with dividend paying, cash generative, and we've got absolutely no debt. And as I always like to say, not even a photocopier on lease. Thank you.
Thank you, Sam. Excellent. Very clear and very positive. It's nice to listen to an AIM company that are doing well. I think we've already got some questions, but just a reminder to everybody, do pile in with your questions. Just keep typing away in the Q&A. No need to be polite about it, and do vote for the ones there that you've already see, and I'll go through them with Sam as quickly as I can. I've got a few here as well, actually, but were submitted previously, but we'll start with the ones on screen. And if we run out of those, I've got some more here. Right, from Rebecca, I recently got into a conversation about the timelines involved in securing these major customers like Superdrug and CVS. Could you talk a little about how long it takes from initial meeting to having Warpaint products in store, please?
Okay, well, it really does vary. I mean, when we went into Tesco, it was quite a quick process for this type of thing. We were in within 8 months. I think if you were to ask me, it's usually, if I was to average it, a year behind. I always like to say, when you're going into these stores and you're offering them a full range of cosmetics, it's not like putting a can of baked beans on a supermarket shelf where they can fit you in a small gap. Usually they've got to take someone out and put you in, or they've got to find you a bay that's 4 foot high and 4 foot wide. You've got to get all the systems on their product. So it is not a quick process, but once you are in, I always like to say you're like a curbstone. They only take you when they really like the brand. There's a lot of work that goes into it. So, you're really given a chance to perform. It's very, very rare that you would go in and they don't like it after 6 months. Usually you get a minimum of 2 years, 3 years to prove yourself.
Right. And with someone like Tesco, what kind of criteria do you have to achieve to stay in there after that 3 years? Do they have particular ambitions for your product that you have to hit?
I actually couldn't tell you that. Everyone has probably different criteria, but I think the growth in Tesco from 50 stores to 1,400, and we anticipate getting more product and more space, speaks for itself. We're growing there. We're not coming out. So I don't know what the criteria are. We've had a similar situation in CVS and a similar situation in Boots. They're delighted with the performance on the brand. Something like Superdrug, it's early days yet, but the initial figures are looking very, very nice indeed.
Mm-hmm. Okay. One from Alex. Why is your strategy not more focused on the EU, which it seems to be your largest geographic segment today?
Well, it is our largest geographical segment at the moment. because in the UK we're targeting the larger retailers, which take a bit longer to get in. I don't believe in the next 12 months to 18 months the EU will be our largest area. I think it will be the UK, and I think if you go 4 years down the line, it will be the US. I mean, you know, you look at the strategy, and what I'm trying to do here is look at the real growth, the real opportunity, and the real opportunities, the real growth opportunities, big growth opportunities are America and the UK and the Chinese online. So we focus on that. Of course, we're working very, very hard to grow in Europe. The growth speaks for itself in the last few years. But when I talk about the strategy, you know, the thing that gets me excited and gets some of the bigger investors excited is the opportunities in America and some of the retailers in the UK. UK is the third or fourth biggest cosmetic market.
Okay. Your growth in the US is great to see, according to Rebecca, but how often do you travel over there?
I've been over a couple of times this year. We have got an office in Manhattan with 3 staff in there. We also have somebody working for us down in Florida, and we have somebody working in our third-party logistics warehouse. So we've got a few staff there. We're over there a few times. I've been over a couple of times this year, but we have, you know, twice weekly, 3 times weekly Zoom meetings. People always say to me, you know, sometimes honesty can be my biggest problem. We are 89% up in America, but I want to manage expectations here. It's at a very low base. You know, last year our sales in America were, I think, £6 million. You know, we expect that to grow this year to 9 or 10, 11, something like that by the end of it. It's not a forecast, but we expect growth there. But it is from a low base. So although it looks great growth, which it is, there is still a lot of potential there. And we're all over it. It's the biggest market in the world, and it's something that we would like to conquer, if you like.
Okay. And are the characteristics of the marketplace, I know you've mentioned the consumers themselves, the very similar characteristics to the UK consumer, but in terms of the way the market actually is structured and operates and the competition in it and your intended position in the market opposite the luxury brands and the other value brands in that market, is it pretty much the same landscape that you're looking at in the UK, or are there some key differences that you've got to be aware of?
It's pretty much the same as the UK. The retailers seem to operate in the same way. They seem to want the same margin. The consumer, it's very similar on the products the consumer want to buy, and the retailers operate in the same way. Is it a competitive market? Yes, there's a lot more brands there. But to be fair, if you go into some boots, there can be 30 or 40 brands in there. The same, you know, if you go into Superdrug, I do think with our brand in terms of our pricing and the quality that we offer, we're pretty peerless. I'm not saying people don't do, you know, a good quality product, but for the price we're selling it for, I don't think anyone gets anywhere near us in the componentry and the quality of the product. And if you go on social media, that seems to bear out. But it's a very similar market. So you start small and you grow.
Right. Then no one's done the same thing as you, or is doing the same thing as you as Warpaint in the US market.
Not identical. Similar brands, but I think we've got a point of difference. CVS certainly thought we had a point of difference. They love the way that our product alluded to what the prestige product was. They said nobody does it as well as you. So yeah, I think we're pretty unique.
I was going to ask you about that particular thing, that sort of mimicking the luxury brand. I mean, the US is a very litigious market. It's got a reputation for it. Have you been threatened with any litigation by the luxury brands for your mimicking products?
We have had letters, not lots, but on the odd occasion we have had letters. We've been doing this for 20 years. We've never once gone to court. We've never actually once paid damages, you know, to these brands. We're very, very careful in what we do that we're not passing off. It's called passing off. You can't confuse people. So no, we haven't had any problems. I think if you look, you know, if you look around the market, the big brands sue each other. That was our idea. That was your idea. You know, you get all of these things. I mean, I'm wearing a white shirt here. It could be a Burberry. It could be a Gucci. It's a white shirt, you know, providing I'm not sticking the Gucci logo on it or the Burberry logo on it. You know, I'm not going to have an issue. So no, we haven't had issues. We have had things in the past. Oh, we don't like the way you've done this. And my lawyer said it's ridiculous. I said, you know what? I'll change the color of the lid. Right, you know, I'm always very commercial about these things. Even if I don't want to be right and spend £100,000 in legal fees, I'd rather just change it and move on. So that's how we work.
Okay.
And it's not been an issue. I mean, if we'd ever had an issue, it'd have to be a public company. It would be in the accounts.
Yeah. Damien asks, are you limited in how much volume you can sell in the US, or are you able to scale indefinitely?
I mean, as I mentioned on the first slide, we use 25 different factories. So it's quite easy. We're nowhere near scale. I mean, some of the factories we use are making for Maybelline, which is a L'Oreal brand. They're making for NYX. They're making for a brand called Collection. So it's not a problem scaling up. It's not even an issue.
Okay, thank you. Another one from Damien. Are there any retailers that you have lost apart from those that have gone bust recently? I can think of one.
The elephant in the room, right? Wilko's. Okay, we'll get Wilko's out the way. We weren't affected by that in any way in terms of payment, because we use Wilko's always operated their cosmetics through a third party, so we weren't hit with any bad debt. Wilko's was immaterial for us. Nice retailer to have. Did sort of 1.2 million a year with them, 1.3 million. But when you're looking at an 80 to 90 million pound business, it's less than you know, it's what, 1 and a bit percent. It's not an issue. No, we haven't lost any retailers. We haven't been thrown out of any retailers other than ones we didn't want to deal with. You know, some of the smaller ones, if they were slow payers. We used to deal with a company called, I won't mention them actually, that's naughty, but, you know, we used to deal with a few, if their payment's bad or they move the goalposts in terms of their T's and C's, will move away. But no retailers lost.
Okay, thank you. Ray wants to know what caused the share price low in 2019 and what have you done to change correct the problem?
We floated in the back end of 2016. In 2019, we had a profit warning, and we got absolutely spanked. And it wasn't, you know, instead of earning 8 million, we earned 6.5 million. It wasn't, and we got absolutely hammered for it. We were a victim, and our big shareholders understood that. We were a victim of a collapse of the high street. So when we floated, we had companies like Pound World. They were our biggest customer. They went bust. We had Factory Shop, had 170 shops. They scaled it down to 100, you know, so we had all these things going on. And we did have a strategy for growth. We were talking to Tesco that time in 2019, but it took us time to get in there. So it was really a focused strategy on growing the business. So that's all it was. We didn't hit our numbers.
Okay, thank you. Could you talk about competition from ELF? This is from Alex. They mention 79% growth in their latest report for international, and this comprises the UK. And they also mention growing their UK teams and seem well displayed at Boots, obviously doing very well in the US as well. Any comments on ELF?
Yeah, I'm here to talk about Warpaint, but I will touch on Elf. Elf grew up on the other side of the pond, and of course we look at them. So last year, when I look at last year's number, and this will really illustrate the potential of the US. Last year, I think they did about 400 million. I think something like that. I don't know what their numbers are for this year, and I don't know what their forecast. I haven't seen the notes, but last year they did 400 million. 200 million of that was from 3 retailers: Target, Walmart, and I believe a company called Ulta. I think Walmart were their biggest customer. So that's where the growth comes from there. And they moved it over to the UK. I don't know what their European numbers are abroad. They have a different business model to us. They spend 20% on marketing. We spend sort of 3%. We rely on the products. Shouting out our PBT margin, which is very important to us, is actually considerably higher than theirs. But it is a good business. There's no question. They're getting more and more space. We're way behind them. We're hoping to catch them up. I believe we've got a good proposition and room for growth.
Do you think that's going to drive you to spend a little bit more on marketing in the next few years?
Our marketing is targeted. It's very, very easy. I mean, we can talk about the elephant in the room. You've got a brand like Makeup Revolution that I believe was quite a good brand, and they got into a lot of places and they spent a lot of money in marketing, and they've burnt millions and millions, over the last few years. That is not the way Ian and I, my co-partner, who's not my co-founder, who's not here, have ever run our businesses. It always has to be profitable and hand in hand. So the answer to the question, if we've got spare money, we will spend it on marketing. We will spend it on opening doors in the US. But what we won't do is go out to the market and say, we're not going to make any money this year because we're going to throw it all at marketing. So the marketing will rack up as we need it. And our marketing tends to be in store. You go into Superdrug, there's a vinyl panel on the floor this way to W7. We'll advertise online. We'll advertise on Amazon. We'll buy 2, get 1 free, these type of things in store. What we don't do is spend, I believe Elf spent a lot of money when the Super Bowl was on, and they got an advertising slot, and I remember their CEO talking about it, and that's their model, but it's not our model. We want to keep our margin up and grow slowly but surely, which I think we're managing to do if you look at the last few years.
Does that same approach apply to the 2 big markets of China and the US as well? You can utilize the same approach as you.
Yes,
you
are. We're doing it in the US, and we are growing. We're growing slowly. If somebody said to me next year, it's very difficult to please investors. We can get you another 100 million worth of turnover, but your PBT margin's only going to be 6%. That'll be going, what's happened to the margin? You set your stall out, no debt, strong margin, pay a dividend. That's what we do.
Yeah, stick to what you know. Yeah, understood. Damien's asking a big strategic question. What are your contingency plans should China invade Taiwan, leading to huge supply chain disruption?
Well, I was asked this question in an interview about 4 months ago, so it's a very good question. I was a bit flippant. It caught me off guard, and I said, well, if China invade Taiwan, all bets are off. And I got a phone call from an investor the next day, and he wasn't very happy. Of course, we have a plan B. The first thing to say is, I believe if China invade Taiwan, the whole world's not going to grind to a halt. I mean, I can't believe the likes of Walmart, Next. I mean, you can run through all the big retailers here and across the pond that are buying stuff from China. There would be a big issue. We're still buying oil from Russia because we need it, and I don't believe it would shut down overnight. However, we do have the option to produce our goods in Turkey. We do have our option to produce our goods in Eastern Europe, Vietnam. I've got to be honest, it would cost 10 to 15% more, but the same would apply to everyone else, to our peers. So, but at the moment, it's very, very difficult to move production and pay 15% more. So we're staying where we are. We do have a plan. I always say to people, since we floated, we've had Brexit twice, Donald Trump, 4 prime ministers, COVID, the war in Ukraine, and we've managed to get through it. You know, I don't know what the next catastrophe is going to be, but somehow the world always keeps turning, and we'll be fine.
Okay, thank you. Elliot wants to know if using Amazon is a long-term strategy, or do you have plans beyond this, and what would the impact of this be?
Well, for me, I like the Amazon model for us. I know we're not gathering all the data, but it's profitable for us. We can't, particularly in America, you can't fulfill as cheaply as they do. I mean, we've gone on to some of the big supermarket platforms. So Walmart, you can go on to Walmart. We were selling some advent calendars on there last year, and it's much more. It costs much more to use other third-party logistics than it does to Amazon. Amazon is a distribution company. So for me, at this moment, it is a long-term strategy. I mean, we are trying to grow the UK, our own website in the UK, and that's working for us. If we could ever grow large enough in the US, which is our intention, yes, then we probably would have the website running side by side with Amazon. But it's not unusual. There's a brand called NYX owned by L'Oreal. It's sold on Amazon. You know, it's just a simple turnkey solution. So, you know, we may very well grow our website more in the US and in Europe as it gets bigger, and we can afford to put some infrastructure in. But I'm quite happy with the Amazon model.
Okay, thank you. Ed wants to know, and I think you've kind of touched on this already, the logistics in the US, but he wants to know, how do you manage the logistics of distributing the product in the US? So is there anything else you can add to perhaps just
what
you said already?
Well, what we do is we're at a logistics, we're using a logistic company at the moment. We're outgrowing it, so we're going to move next year to a much larger one. And what we ship all the goods into them, and they ship whatever we need into Amazon, and they pick and pack and send goods into CVS for us, Five Below, Kroger. You know, they'll just pick and pack and send the goods out. The only difference is they're not our staff, they're their staff. And we'll pay so much per pallet, so much per box, so much to store a pallet there. You know, we've worked out, in order for us to have our own logistics there, we really need turnover of 15 to 20 million, and then we would start looking at it. So we're not, you know, years and years away, but at the moment that's how it works.
Right. Okay, thanks. Couple of similar questions here, one from Ray and one for Rebecca, both asking you whether you feel a female non-exec would add value to the board, or but are you any nearer to recruiting a female NED to add useful skills?
Okay, well, we are in the process, because we had a non-executive director resign. We are in the process in looking for another non-exec. I'm going to be quite open here. I would like it to be a woman, because I get asked this question all the time. That's why I'd like it to be a woman. We always take people on. It's not solely my decision. We take the best people available at the time. And if you look across the business, a lot of the senior management, most of the senior management are women. So not having so many women on the board is not a conscious decision. It's just the people that turned up at the time. I should imagine next time it will be a woman. I mean, I've had, you know, our chairman on to us, and he says he's got a couple of people he wants to interview. We're also using a headhunter. I've had the Nomad on suggesting people to us, and the Nomad said to me, oh, and I've got this person, and she's a woman. And I thought, well, let's go and ask the RAF about that. You've got to be very careful that you don't discriminate. So when we look for the next non-exec, we will throw the offering open, and we will interview, you know, all the people we feel we should interview. I would love it to be a woman. I don't see. Do I think a woman would add something to the business? What, because she's a woman? Not necessarily. And I'm spending a lot of time on this because it's something I get You know, I think if she's got a knowledge of cosmetics, yes. You know, I find in this business a very interesting thing. You talk about women producing cosmetics. When I produced cosmetics and when I did the new product development and the business was in its infancy, we always produce cosmetics that we thought would sell. With some of the girls here that are doing our new product development, and it is nearly all women doing it, they very often will say to me, "Oh, well, I love this," and I say, "Well, we're not making it for you. Do you think we can sell volume?" So you know, there's pros and cons. We definitely would like a woman on the board, and I'm hoping that will be the case. We will appoint someone by the end of the year. So you can ask me the same question next year, and I'm hopeful.
All right. Well, there's certainly a couple of our members are rooting for you there, Sam. So I hope you manage to find a suitable woman.
Okay.
One question for Steve here. Warehousing and logistics are often a growth company's underdoing. Can you tell us about your expansion strategy here to support the growth?
Well, if and I'm sure some of you have heard this presentation before, you know, last year, if you'd have looked at the presentation, we had 167,000 square foot of warehousing. This year, we've got 177,000. The warehouse on the end of our block came up for sale. We bought it to help growth. If we need more space, we'll go and get more space. I mean, the thing with our business is we're not producing things. We outsource all our products. So from the point of view of manufacturing, it's just a question of bringing in more stock. And if we can't get it all into this warehouse, we're not producing any more SKUs. We've got W7's got 700, 800 SKUs. Sounds a lot. We've got 150 colors in nail polish, but we're not producing any more SKUs. We're just producing more volume. So it would just be a question is you bring 2 pallets of one SKU in here and you put the rest in storage. And as they sell out, you bring them in. So scaling up is not a problem. Maybe a few more warehouse guys, maybe a bit more admin, even MPD. You know, the MPD make a lipstick. They spend 3 months, you know, putting it together, new product development, sorry. And, you know, once they've put it together, you can make $1 million or 2 million. You don't need any more new product development people to make more product unless you're, you know, doing other brands, which we're not at the moment.
Okay. Well, thank you for that, Sam. Well, I think we just about filled the time, actually. I got a few other questions down here, but I think we've only got a few minutes left. Oh, well, there was one question here. Maybe I'll pick on this. It's a slightly step out one. Maybe I don't think anybody's asked you this yet, but in terms of other categories, say skincare is a big area. Are you looking at expanding into any other near near product categories to the ones that you already do?
Well, W7, I talk about it being color cosmetics because it is predominantly color cosmetics, but we do have a skincare range doing very, very well. In Tesco, it's doing well on Amazon. We make face masks, we make cleansers, we make toners. So we're developing that range under the W7 banner. We also sell false nails, we sell false eyelashes. It's quite, W7 is quite a wide range. It encompasses all cosmetics other than fragrance and men's products. But we do, as I mentioned earlier, a men's brand. So we do have some skincare and we're looking to grow that because whoever asked the question is, I'm sure, aware that skincare is a growing market. So it is something we're concentrating on.
Okay, thank you. Well, okay, I think we're just about done for time there, Sam. So thank you very much for spending the time with us today. That was an extremely useful update on how you've been doing in the last year, and hopefully we'll have you back again next year. And it's good to meet you again. And wish you all the best with the coming year.
Okay, thank you all for listening. Thank you, Mike.